Hello, please, is it me or say it's not talking or what? Because I can't hear anything. No. Anna,
My class. Hello.
oh,
Yeah, I'm around. In fact, I'm trying to get to the IT guy. The internet is still disturbing us, but we are back.
oh,
We are back now, so we can proceed.
okay, sir.
Okay. Thank you, Mr. Salo. I'll get back to you later. Yeah. Okay. So let's try to do something quickly. What I was trying to say was, let me share my screen. And please, let's help ourselves by being quick, being responsive, because the internet is not too stable. We have to understand the purchases system to understand the controls that we need to embed. When you finish school, you could get a job or you can start your own job as a consultant, systems design, systems analyst, systems design, and it could be accounting systems. Yes. So this is a subsystem of the whole accounting information system. And I said, typically, this is the process, we have described it. The various sections of the organization will raise purchase requisitions, and send them to the purchasing department. What is a purchase requisition? What is a purchase requisition?
Hello, sir. Um,
Yes,
Sir.
please, go ahead. Yes, sir.
Um, it's basically a document that employees uses to order for a purchase order within the organization. So they use the purchase
Okay,
requisition.
so
Um, they submit it to the procurement department before they give them the purchase order in order to request for the goods.
thank you very much. I think that's okay. So the various units or departments, if you should use University of Cape Coast as a case, Department of Accounting, which is your department, when they need to buy something, they cannot just go and buy it. They will have to request what they need from the procurement department. And how do they do the request? Even though they could take a phone and call, in business, we communicate officially on paper. So they will raise a paper to communicate that kind of information that they need something. And that paper they will raise for the communication purposes is what we call the requisition, the purchase requisition. All the other sections of the university will do same, send it to the procurement department. Similar thing happens in other organizations. So when the procurement department or the purchasing department has collected enough, maybe they will have a period where they do the purchasing from outside. So when that period is up, or when they think they have enough of requisitions from the various sections of the organization, then the purchasing department will now connect with the outside suppliers. The purchasing department will raise a purchase order. So you have to know these documentations, please. Very important. Purchase order. We have already talked about, we have talked about purchase requisition. Yes, you need to know about it and how it is used. We are now talking about purchase order, and I've explained what it is and what it is used for. The purchasing department will raise this to be sent to outside suppliers, requesting for the goods that the organization needs. When the goods arrive in a typically large organization, they might have a receiving department or a receiving section. They are in charge of receiving the goods from the suppliers. But let's see here. When they raise the purchase order, they will not raise just one. They will raise multiple copies of the purchase order because they need to keep one for themselves as the purchasing department, send one to the accounts office, and ideally send one to the receiving department. The receiving department will have to check the goods received against the purchase order for reconciliation. Then the receiving department will, whether we have the same, they are inside the warehouse or it's a different section of the university of the organization. If it is a different section, if the receiving department is a different section from the stores, the warehouse, then they will just get the goods to the warehouse, production carries on. And then they will raise actually a document called Goods Received Note, GRN for short. That is acknowledging that they have received this quantity of goods, this quality, this color, all the descriptions. And they will match that with the purchase order. If there is any discrepancy, that needs to be documented. So the goods dispatch notes, together already the accounts office will have a copy of the purchase order. So the receiving section will send the goods received notes to the accounts office. The accounts office already having the purchase order. And that helps in reconciling that what we ordered, what we received, and what we are billing, or what we should expect as our bill we are purchasing, should tally. So the account department will match the goods received notes, which is the GRN, to the invoice as the suppliers will bring us. And it will also have to match it with the purchase order. Then the accounts office will record an account for the invoice, send payments, and supplier will extend credit in the future. So it's a cycle. As you see, it's as a circle. This thing continues in business organizations every day. We are preparing ourselves to work in businesses. Probably you will be made to head or to go and work in the purchases department. This is how the system is like. What controls you? First of all, if you set up this control, what is the objective? If you have this system, what kind of objective do we want to achieve with this system? That informs the kind of controls we have to embed in the system. What kind of objective do you want to achieve when we are purchasing and we have this system? So now let's come to the table. It explains everything very comprehensively, right? The things that we want to achieve is that is what we call the control objectives. We want to ensure that all recorded purchases represent goods and services actually received, and that there is no purchases recorded erroneously or fraudulently. So if we don't want that to happen, what controls would we set up? We have to set up a lot of controls. And of course, this objective is against the assertion called occurrence and existence. All purchases have occurred, purchases that as we have recorded have occurred and they actually exist. So we have to set up controls to achieve this kind of objective. What controls would we set up? Some of these things we can even disregard the text we are going through and speak them. We can even speak more than we have in the text. But let's go through them. But I want you to actually bring your own common sense to the table because they are not technical stuff that you have to achieve. One, control that has to be set up if the organization can achieve this objective. Authorization procedures. Not just anybody at all can order for goods from suppliers. If you operate a system like that, then errors are bound to occur, fraud also bound to occur. So we should have authorization procedures. And you see these things in almost every serious organization. Who has the power to sanction this kind of transaction? Above certain limits, a senior officer. So we have some categories. Okay, this level maybe a junior person can exercise his discretion and carry out a transaction. Above certain amount, it has to be this person. So the same thing applies to ordering for goods, purchasing them. There has to be a senior person who authorizes the purchase of goods. And that senior person will be in the purchases department. When I talk about the controls, I will match it with if the auditor has to test whether that control is there or not, what kind of audit procedures would he employ? Those audit procedures are also referred to as test of controls. So if the auditor wants to check that authorization procedures are in place, this is what he can do: inspect policies and procedures. Inspect policies about authorization, procedures of authorization. You can also inquire from management about how these things are working. I mean, this is very, very commonsensical. And we do some of these things every day without knowing we are doing auditing. We ask questions from people because we want to get understanding of how something works. Yes, in auditing, that's an audit procedure. Now let's go to the next control that we have to set up to make sure that all recorded purchases represent goods and services received. No fictitious, no erroneous purchases. The next control that we can do is that the responsibility for placing the orders, recording the purchase order, and making the payment is carried out by 3 different staff members. This is very important. Let me repeat it. We talked about this last time. We have to break the whole process. See, it's a cycle of many segments. We have to break it into parts so that we have checks and balances. That's what we call segregation of duties. So one person should not hijack the system to place the order, do the recording of the orders, also record the purchase. I mean, when the purchase orders are recorded, the person also makes payments to the suppliers. No, one person cannot do all of that. Possibly that person also received the goods. When you go to very small organizations, you see that. So one person or maybe 2 people, and they work almost like one person. That person places the order to suppliers, records the order, receives the goods by himself, and then is also in charge in making payments to the suppliers. When you operate a system like this, that person can loot the organization, and by the time you realize, the organization is already collapsed. So there should be segregation of duties, and this is very understandable. How will the auditor test whether this control is there? The auditor will observe the processing of purchase orders throughout the purchasing cycle and evaluate whether proper segregation of duties is operating. So this is just simple thing the auditor will do. Observation that there is proper segregation of duties. The auditor can be there and just see a sample of a transaction involving purchases. That one person does this, he doesn't do the next process. Another person is in charge, so he transfers it to the next person. Or the system, I mean, he does his own thing. One person does his side of the thing, another person does this, another person. These 3 people will be checks on themselves. Okay, the auditor will have to check that that is happening. Another control that can be set up to make sure that there is security around our purchases is that purchase orders that are raised, purchase orders are raised. We have to make sure that purchase orders are raised for each purchase that we make. So that at some times we just make purchases. Maybe we call the supplier on phone, he brought it, we didn't raise the documentation, we didn't raise purchase orders. This happens to all the other sections. about good received section. It shouldn't happen that we receive the goods without the documentation. Documentation should be intact throughout the whole process. So purchase orders are raised for each purchase, and it is authorized by an appropriate senior personnel. The auditor will have to check that this is working. By doing this, examine a sample of purchase order to ensure they have been appropriately authorized. Review the delegated lists of authority for purchases. So the authorities that have to sanction, you have to review, and you have to check that they are the people who are doing the authorization. Their signatures may be beneath documents. Another control is approved purchase order for each receipt of goods. When the goods are received, we have to check that the purchase order that is bringing those goods into being were actually approved, and that nobody fictitiously passed in some purchase order. So it has to be the approved or the official purchase order. That's where, when we're discussing yesterday, we said that the purchase order form can be made to have some security features, not too much security features, but at least they can be serially numbered so that when the series is broken, it can give us an alert that something is happening. How will the auditor check that this control is working? Approval of purchase orders for each goods received. This is what he can do. For a sample of goods received notes, a good received note is an acknowledgement of the goods that we have received. You can take a sample of GRN, ensure there is a related purchase order that has been properly approved. In that case, you see that we actually achieved this one. You achieve the fact that each purchase order raised is authorized, and that each purchase we do, there is a purchase order back in it. There's that documentation. What controls can we talk about again? Staff receiving goods, that's in the goods received office or department. Staff receiving goods, check them to the purchase order. Very, very good control. It is something that must be there in the system. Auditor will check whether this control is working by observing receipt of goods by staff to confirm whether the check is done. This will be just observation. The auditor can be there as if he is part of the people working, but he's observing that those procedures are working. The auditor will inspect a sample to confirm whether store staff undertake this check. Another control, stores clerks sign for goods received. Purchase orders and goods received notes are matched with the supplier's invoices. That is very important to make sure that, especially between the goods received note and the invoice, to make sure that the goods that we have received, it is only that one that we should pay for. If there's a discrepancy between the invoice the supplier is bringing us and the goods we have actually received, that needs to be reconciled. You don't just pay. Just imagine that the goods received note says we have received this quantity at this price, and then the total is this. Let's say 1,000, and the invoice comes as 2,000. If you just pay invoices, without this simple control of matching, you are in trouble. It's a simple control, but it works like a magic. It saves your business from collapsing. The auditor will have to check that this is working by examining supporting documentation to ensure that there is a matching between the GRN and the supplier's invoice. Simple put, that's what it is. Supplier statements independently reviewed and reconciled to trade payable records. The supplier, we will be paying the supplier. Normally, we don't do cash-based transactions. It's a credit. The supplier will bring goods. That's why we're even talking about invoice. And at this point, I am taking it that you know all these documents because you're accounting students. You know what invoice is, you know the difference between an invoice and a receipt. You know what good received note is, goods dispatched note is. Please, you need to solidly understand these things before you can understand accounting systems. And you can never be an accounting person without understanding accounting systems. Any question, please? Any question? I guess someone may have a question. Please, any question? Any question before I proceed? Okay, let me proceed. So when we pay, we sometimes, is it that we may be doing business with a supplier on a continuous basis. So if we pay this invoice, there may be another invoice to pay later, and on and on and on. So sometimes the supplier will bring advice on what we have paid remaining. The supplier may even bring statements telling us all the transactions, payments, and the goods we have received, our debt, our payments. That's a statement. That statement needs to be independently reviewed and reconciled to trade payable records. Because we buy on credit, it will create trade payable, which is a creditor's account. And there has to be always a reconciliation between the trade payables account and the supplier's statement. And it has to be done independently. Possibly two different people needs to do that. So that it doesn't become like if one person is doing it, if the person is doing some deal somewhere, he will force to agree the two. So if you do them independently and something wrong is happening, the other side will expose it. That's the reason why it has to be done that way. The auditor has to check that this control exists and is working by doing this. Reviewing procedures for reconciling supplier statements and reperforming a sample of reconciliation. The auditor can reperform supplier statements, do calculations, come and do some calculations in the trade payables account. Do they agree? If discrepancies, why and how are they resolved? That's what the auditor will do to confirm that that control is happening. All of these controls are to help in achieving this objective, ensuring that recorded purchases are correct purchases. They are not purchases in error. They are not fraudulent purchases. And it is against the assertion, occurrence, and existence. The last time I explained the assertion, so I don't need to repeat myself this time. Now let's come to completeness. This is what the company may want to achieve to ensure that all purchases transactions that occurred have been recorded. All of them, none is left out. Because if you don't take care, there can be some purchases, we have received the goods, we have even made a payment, but our records are somehow broken about them. How would you make sure that every purchase as it has occurred has been captured, recorded duly? You have to set controls to achieve that. These are some of the controls we can set up. Purchase orders and goods received notes are matched with the supplier's invoice. Some of them are repetition from previous one, but they achieve two things. So it's the same control achieving two things. When we match GRN, the GRN is a representation of the goods we have received. If you match the GRN to the supplier's invoice, at least we are trying to establish that every invoice that we are going to pay for actually links with goods that we have received. And that all purchases represented by the GRN, are captured, and there's completeness. Yes, at least it's part of an attempt to ensure completeness. There are other controls that will kind of buttress this one to achieve it completely. What will the auditor do of GRN being matched with supplier's invoice is done? The auditor can just observe that that thing is happening, that there's a procedure, there's a process for matching the two. So for a sample of purchase orders in the year, ensure each has been matched to related invoice that was subsequently recorded. The procedures part, I don't think is so much difficult. Once you understand the control, you can understand what the auditor needs to do to test that that control is working. That control exists and is working. Okay, so still on completeness, another control we can set up is periodic accounting for pre-numbered GRNs and purchase orders. We talked about this last week, that if we want to ensure that things are recorded completely, at least we can pre-number the GRNs. We can even pre-number all our forms so that we check the sequence to make sure that for example, all GRNs that have been taken from the GRN book, we match it with maybe batches of goods actually existing to make sure that, oh, okay, for this GRN, this is the good. For this GRN, this is the good. It also attempts to achieve some level of completeness. The auditor can check whether this is there by reviewing entities' procedures for accounting for pre-numbered documents and inspecting a sample of GRN for sequential numbering. Independent check of amount recorded in the purchase journal. Supplier statements independently reviewed and reconciled to trade payables. Rights and obligation. Rights and obligation means that okay, let me read the control objective, it will explain it. To ensure that recorded purchases represent the liabilities of the entity. Yes, when we record purchases, because we have actually purchased on credit, we create a liability account, trade payables. We have to make sure that all the things that we have recorded as trade payables actually represent the liabilities of the company. And that is also informed from the top that we want to ensure that all purchases that are recorded are actually true purchases and there is no fictitious or erroneous purchase. Once that one is even done, it helps in checking this one. Obligations, the obligation side. But this is a control that we can put in place. Purchase orders and GRNs are matched with the supplier's invoice. So you see, it is even a repetition from what we did at the top. And the auditor needs to examine that this kind of control is there. Another objective, accuracy, valuation, allocation, classification, to ensure that purchase transactions are correctly recorded in the accounting system so that a purchase of motor van, which is to be used in the company as a non-current asset, is not wrongly recorded as an inventory. It's not wrongly recorded as a good. That is an issue of allocation and classification. Valuation purposes, trade payable as we have it reflect what the accounting standards are saying. If there needs to be some write down, all of this valuation stuff, you understand it better than I do. So let's see the controls that we can set up to ensure this objective. Purchase orders and GRNs are matched with the supplier's invoice. That actually helps in achieving accuracy. Mathematical accuracy of the supplier's invoice is verified. We can do recalculations, reperformance. So these are the audit procedures or test of controls the auditor can do to confirm that these controls are there. Amount posted to general ledger is reconciled to the purchase ledger. Chart of accounts in place to make sure that there's correct classification. Cutoff. Cutoff is the same as how we explained it in the sales system. The accounting year, the whole of the business life is divided into the so-called accounting years or reporting periods. So for a given reporting period, we capture all the expenses, all the income that strictly pertain to that accounting period. There should be no mismatching. So the cutoff is related to the concept in accounting we call matching. You have to make sure that what has been recorded as purchase trade payable in a given period is actually for that period and not another period. That's the control objective. Let me read it officially as we have it. To ensure that purchase transactions are recorded in the correct accounting period. What controls would you put in place to ensure this occurs? Some of these things, if I ask you right now, without even reading the textbook, you can tell me a lot of them which are 100% correct. But let's read this. All goods received reports forwarded to accounts payable department Delhi. The Delhi word, Delhi, is the most important thing. If you do the forwarding Delhi, it's not going to happen that 31st December, let's say the accounting period is January to December, the 31st December, because you actually do the recordings daily. But if you delay, then 31st December, let's say 2020, can shift into 2021, January, because of the delay. So you can do daily recording of your documents daily recordings of them to ensure that the cutoff then is actually achieved. Procedures in place that require a recording of purchases as soon as possible after goods or services received. Yes, not too technical. And the auditor will have to check that these things are being done. And the sets of controls are very commonsensical. Compare dates on reports to dates on relevant vouchers. Compare dates on vouchers with dates they were recorded in the purchase journal. So if, for example, some voucher was passed in 31st December 2020, and the recording was done February 2021, you know there's a breach of cutoff. You clearly know that. You will know. And that is caused by the delay thing that we are saying you shouldn't make it okay. It should be daily. If the same 31st, the thing is recorded, then the possibility of a cutoff breach happening is very low. It may even not exist. Okay. So any questions about the purchasing system? Or just anything you want to say about it? Hello, class, are you with me or you are gone?
Say I've been network issues.
Oh, sorry, I'm not
Network
going with you.
issues.
So,
The
what
network.
The network.
Yes.
How about you're talking right now?
It just came.
I can clearly hear you. So why don't you use the opportunity to say what you want to say? If you have something you want to ask what I've said, a question for clarification or something, you can do that. Okay, so let's take this simple question and then we can go for now whilst we solve more other questions. Derek, a limited liability company, operates a computerized purchase system. Invoices and credit notes are posted to the purchases ledger by the purchases ledger department. The computer subsequently raises a check when the invoice has to be paid. Required. This is the control that should be in operation. A. over the addition, amendment, and deletion of suppliers, ensuring that the standing data only includes suppliers from the company's list of authorized suppliers. B, over purchase invoice and credit notes to ensure only authorized purchase invoice and credit notes are posted to the purchase ledger. What controls should be in place to achieve these control objectives? You can read the solution for yourself to kind of get some clarification about what we are trying to do. Inventory system is for yourself to read. Now let's go to the payroll system. Bank and cash is for you to read. Okay, payroll. Without even going through this text, everybody, to a good extent, understands how the payroll system works. Here in the university, we have workers and we have different categories of workers. We have academic staff and non-academic staff. At least this is a broader division. Inside each of these broader divisions, for example, if you take the academic staff, we have several grades. We have even senior members and non-senior members. For example, I am a senior member. Some people who teach you may not be senior members. They may be senior staff. Within the realms of senior membership, we have several grades. We have professors, we have associate professors, we have senior lecturers, we have lecturers, we have assistant lecturers. Yes, that's so in almost all organizations. These people have to be paid. They work. And their payment is based on some criteria, mostly the hours of work. Some may be on the basis of the output of work, not necessarily the hours, even though it is mostly based on hours. Like here in the University of Cape Coast, payments are based on hours mostly, even though some may be based on some other things. So the payroll system is simply, as I've described, a system of employees, the time they have used to work, their grade, how much they should be paid based on the time and their grade. There are other complications like deductions. Some are statutory deductions, taxes, and others. Other complications mostly the complication comes in the form of deductions. Sometimes there could be other deductions that are not statutory. For example, welfare deductions. Here in the university, they deduct something from our salaries for hospital management. If some employee has also taken loan from the organization, that also needs to be catered for in the process of payment, everything. So generally speaking, that's the payroll system. So you can see the summary here. Documentation and authorization of staff changes. Of course, that's another thing you have to know because it has to do with staff. Their grades changes. Some will even move from grade to grade to another grade. Some may leave altogether. Others may join. The database on them. The integrity around the database for the staff population, their grades, the staff grade, the hours worked, and so on and so forth. Then calculations, payment, authorization, and deductions. This is where you should have your mind. So I've described it, and all we need to do is look at the control objectives, the controls that we have to set up to achieve that objective. If the auditor wants to test whether that control is working or not, what procedures would he do? It's very simple as that. Occurrence and existence to ensure that payment is made only to bona fide. It's not bona fide. They say it should be pronounced bona fide. I don't know where that will come from, but that's how they say you should pronounce it. Bona fide employees. What? To bona fide employees of the entity. So you don't pay to ghosts. Here in Ghana, a lot of taxpayers' money are paid to ghosts. And I don't know when ghosts began to buy shirts to wear, to do things like we do, to receive money. Okay, so if you want to make sure that all payments are made to bona fide employees of the organization, what controls would we put in place to ensure that? A number of them. Number one, segregation of duties between HR and payroll functions. Human resource people, they hire, they do the training, and they promote. They say, okay, now you deserve to be this. You are a senior member. You are this. They normally hold the data. And then the payroll function is normally in the account section, HR and accounts. There are two different sections. Okay, so that segregation helps. If we merge them and we get a crooked guy, oh, the company is dead. We'll create ghosts and pay money to ghosts. And the ghost will definitely become himself. So that's why we want to ensure segregation of duties between HR and payroll functions. But this segregation can also bring complications. If you don't have, this segregation is based on the assumption that the organization operates a very effective database system, not the traditional one. And now you need your computer applications. There should be a centralized database. Even though we have HR and we have accounts, HR should not have its own database about staff. And then payroll section, which is in the accounts section, also have its own database about staff. No, the whole organization should have one database about staff. So whether it is payroll section who needs to know who, or HR, or wherever, they pull the information from the same central source. In that case, the segregation of the functions will not cause any problem like the people I'm dealing with is different from, or the number of people I'm dealing with, because I have a different database, is different from what is in another place. So segregation of duties, the auditor will have to pass test of controls to check that this control exists. By doing something like review payroll and HR job descriptions and company policies on payroll process to evaluate whether proper segregation of duties is in place. You may not need to write the same words, so please don't go and chew. Use your mind. We are explaining it for you to understand it. You can interrogate it. You can even disagree with what they have written because you have a better way that that control can be tested. That is what we call learning. If you just see what is here, as if you are reading the gospel, and I think the gospel can even be interrogated, but those who are seriously faith-based people will have problem with me. But that's what you do to everything. Ask questions about everything. Doubt everything because you think you can bring something better. Okay, so let's go to the next control to ensure that we don't pay money to ghosts. Personnel files held for all employees. If you come to UCC, all staff have files. We call it file, but it's actually a folder with files. I don't know how come they call it files, but Okay, files inside some folder, and it contains information about those personnel, notably their grade, when they jump from this grade to this grade, everything about them, their history of employment. So that will help us at least to know that once your file exists, then you are not a ghost. But if you don't have a file system, for example, if you don't keep files for employees, and when we have people into the organization, they are just there, no records, no files on them. Then if someone is creating ghosts into the organization, we can track. You already know what the auditor can do to check that every employee has a file. Authorization procedures for hiring, terminating, time worked, wage rates, overtime, benefits, etc. This is straightforward. All of these things needs authorization by a senior officer so that the crooks in the organization don't achieve their objectives. Someone authorizes that this person is to be hired. It shouldn't work like anybody at all can bring something as someone as a worker in the organization. Oh, he's my cousin, so let him come. Oh, this is my girlfriend. No, 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 no. When people are terminated, it is authorized. The authorization will also ensure that there is complete documentation to these transactions. And all of the other things need authorization and documentation. Review and test authorization procedures and documentation, of course, as well. Any changes in employment status of employees, example, maternity, special leave, should be informed to the HR department because sometimes those things uh, affect the monies that are paid and some other things so that the payment will not be wrong. The auditor will check if this control is there by reviewing policies and procedures in place for changing status and consider whether it is adequate. You can review personnel files for a sample of employees whose status changed in the year to make sure that those things reflect in their calculations and the whole of the payroll system. Use of time clocks to record time work is very good. Organizations that use this system, it is very difficult for someone to just come and say, oh, I work for this number of hours, even though that is not true. You don't come and tell how many hours you have worked. The system records it because when you come, you clock in. When you leave, you clock out. And the system computes the time that you have worked automatically. If you don't have these clocking systems, for example, here in Africa, you might find most organizations using something like a notebook, paper-based recordings. We cannot say that it's bad, even though the clocking system is better. When you are using such a system, people writing in books, signing, um, recording in a book about the time they start job and the time they left, you have to make sure that that there are supervisors of that process so that people don't sign for others. Someone can be home 1 week. He has never been to work. Yet when you go to the attendance book, he has always signed in and out. So who did it? You should have proper controls to make sure that people don't sign for others. Clock cards approved by a supervisor. If you're not using a clock card and you're using a book, maybe there can be a supervisor who is sitting there and monitoring who is signing in, the time he's writing as the starting time, who is signing out, and the time he is writing as the sign out time. Okay, so it's as simple as that. Employee numbers assigned to each employee. So employees should have numbers. If you come to the University of Cape Coast, every employee has a number. My number, my staff number is, of course, they normally add some prefix to show your grade. So mine is SM for senior member 13456. Every person has it. Yes, and it's important to check that monies that we pay to employees are actually to the right employees and no ghosts. If you have a system where there is no staff numbers, if someone brings his wife who is not qualified to be here, no, he doesn't even have an appointment letter, everything, he just brings it in and forge some papers for her to be paid, who will know? The staff numbering at least helps in identifying the right people from the wrong ones. Payroll budgets in place and reviewed by management. So that's all about making sure we are paying money to the right people. Completeness, to ensure that all payroll costs are recorded for work done by employees. Pre-numbered clock cards in use. Regular reconciliation carried out by payroll records and employee costs recorded in the general ledger. Comparison of checks and bank transfer lists with payroll to ensure all employees paid have been recorded via payroll. Preparation and authorization of checks and bank transfer lists. Accuracy, valuation and allocation and classification to ensure that all benefits and deductions, tax, pensions are computed correctly. Reperformance of a sample of payroll benefits and deductions. Reperformance to confirm that it is correct. Payroll budget in place and reviewed by management. Agreement of gross earnings and total tax deductions with taxation returns. I'm doing a lecture, I'll call you. Okay, so that is basically about the payroll system. The rest are very easy to comprehend. You can read this question with the related solution. It's very straightforward to understand. What we are going to do at this point is that we want to take some examination question and run ourselves through it and see if we can connect some of the things we have learned so far to the question. It needs not to be complete because we just actually probably, learned this. But at least it will give us a sense of what we should expect. Okay, so I actually put up this simple question. I'm going to run through it. We will attempt to discuss the solution and then that will bring us to a close. Adoma Company operates a chain of hotels across the country. Adoma employs in excess of 250 permanent employees, and its year end is 31st August. You are the audit supervisor of Viola and Co. And you are currently reviewing the documentation of our domain's payroll system detailed below in preparation for the interim audit. So the next 10 gives us the details of Adoma payroll system. Permanent employees work a standard number of hours per week as specified in their employment contract. However, when the hotels are busy, staff can be requested by management to work additional shifts as overtime. This can either be paid on a monthly basis or taken as days off. Employees record any time worked and days taken off on weekly overtime sheets, which are sent to the payroll department. The standard hours per employee are automatically set up in the system, and the overtime sheets are entered by clerks into the payroll package, which automatically calculates the gross and net pay along with the relevant deductions. These calculations are not checked at all. Wages are increased by the rate of inflation each year, and the clerks are responsible for updating the standing data in the payroll system. Employees are paid on a monthly basis by bank transfer for their contracted weekly hours and for any overtime worked in the previous month. If employees choose to be paid for overtime, authorization is required by department heads of any overtime in excess of 30% of standard hours. If employees choose instead to take days off, the payroll clerks to check back to the overtime worked report. However, this report is not always checked. The overtime worked report, which details any overtime recorded by employees, is run by the payroll department weekly and emailed to department heads for authorization. The payroll department asks department heads to only report if there are any errors recorded. Department heads are required to arrange for overtime sheets to be authorized by an alternative responsible official if they are away on annual leave. However, there are instances where this arrangement has not occurred. The payroll package produces a list of payments per employee. This links into the bank system to produce a list of automatic payments. The finance director reviews the total list of bank transfers and compares this to the total amount to be paid per the payroll records. If any issues arise, then the automatic bank transfer can be manually changed by the finance director. Required. In respect of the payroll system of Adoma Company, identify and explain 5 deficiencies. That is I recommend a control to address each of these deficiencies. And I describe a test of control that the auditor should perform to assess if each of these controls is operating effectively. Ladies and gentlemen, this is the question. Have you seen it? Are you viewing my 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 screen? Hello, are you with me?
Yes, please, we are with you.
Yes, sir. Yes, sir.
Yeah. So I guess you have a gist of the question. So this is what I want us to do. It is already 8 o'clock. I want us to, I'll just post this question on the platform. I want us to go and read through the systems, think actually to understand them, and attempt this question by ourselves for the first time. And I will later add solution as I think it should be to the platform so you can check and probably fill in some gaps if it is necessary to do so. Is that okay?
Yes, sir.
Okay, so this is where we'll bring the lecture to a close on transaction cycles and related controls, also known as test of controls. We will talk about, I think, what should we talk about again as part of what we should expect in the exam? I think we'll have to talk about audit evidence in general. Then I'll throw more light on the assertions. Yes, probably, together with few things, so that if there should be any question on audit evidence in relation to assertions, because this one mentions assertions in passing, it's not the main focus, so I'll have to deal with that one to make it complete. Okay, thank you very much for your attention. If there is no question.
Sir, please, is a question on the model?
Okay, question.
Sir, please, is a question on the model, the
Yeah,
one you
the
are showing
question
right
I'm
now?
saying you should go and attempt is the one I'm showing right now. But I'm going to put it on your Google platform so that you can have access to
It's
it.
on the model. Okay, sir.
Are you okay?
Okay.
Okay, sir.
Okay.
So thank you very much.
Yeah, thank you very much.
Welcome, sir.
Yeah.
All right. Bye.